2nd of June 2023, Friday, MEO with Cal once again. Now, this video is going to be pretty long because I got more than 20 slides to share with you. So without further ado, let's start. All right, Wall Street is happy and complacent, really. Everybody is looking at the market to go higher right now. Is this a perfect cocktail for the sellers to come in, or is this the start of the bull market? Let's go into details. Let's do it. Now, disclaimer apply as usual, and thank you, AIMS, for the kind sponsorship. Now, first of all, let's talk about something in Singapore. Now, our Prime Minister Lee Hsien Loong tests positive again for the COVID-19. This is a COVID rebound, apparently. So the thing is this, but now he's feeling better and he's feeling good. Apparently, these type of cases happen about 5 to 10%, right? So guys, if you got COVID and after a few days later, you don't feel well, do understand this. This can happen to you, all right? So take note of that, yeah? This is very, very important. Now, put it away, let's look at the global market right now. So the Senate has passed the bill to raise debt ceiling, preventing the first ever US default. And that makes everyone happy. And of course, we share about the China-Hong Kong market. We said they entered the bad territory. Today, Hong Kong stock market went up by 4%, right? 4%. So that shows that a lot of funds are coming back to the market. Now, is this the last hooray, or is this the start of the real bear? That's where we'll talk about this later. Now, one thing is that the psychology of the market cycle now, we are definitely at the complacency side. We just need to cool off for the next rally, and this is what usually happens. Only after that, you see anxiety. Now, most of the market, especially for the S&P, for the Dow Jones, we're somewhere at this point right now. So the market has to stay afloat above here. If the market breaks down the previous low, which is the October low, you could go into anxiety mode and denial, and then panic will usually surface. Now, many bears, like example, Mike Wilson, Michael Hanna, Ray Dalio. All right, these guys are bearish in the market, but the thing is this, while they are bearish, people like Tom Lee, they are bullish. So what's going to happen right now will be very interesting. So last night, we saw the Dow up by 153 points, NASDAQ by 187 points, and the S&P up by 41 points. Now, main thing is that NASDAQ has rebounded to the level that I call for sell, and I believe that this number will go to 14,500 tonight. But is this the time to really buy? I really don't think so. Now, yesterday, NVIDIA up by 5.12%. Wow, what a recovery. Now, you look at the thing itself, right? It's because now everybody feel that the debt ceiling issue will be out of the question. And of course, now we all know that it passes the bill. So question is, what's next? Now, the Fiscal Responsibility Act passed by a vote of 314 to 117 with bipartisan support on Wednesday night. So seemingly everybody just don't want to be blamed for this round. And to me, it's all right. Now, the thing is this, with big negative and big potential negative catalyst being removed, the market feel happy. They are buying the stock right now. Now, the thing is this, we all know in June 13, 14, we will have the FOMC meeting. Question is, would that be a problem? Now, we do know that the market is looking at a pause, and some Fed official coming out and say they're likely to pause, but the probability has dropped a little bit. But to me, it's all right. I still believe that there's going to be a rate hike in June itself, because the ADP numbers is really good, all right? The ADP numbers is good. The jobless claim numbers are good. So overall itself tells me that there is a good chance that we will have a rate hike. Now, look at the video. We saw it came down to $378 yesterday. Today rebounded back to 397. The one only concern is this, the volume did not follow. So yesterday, the market has went back up above the 397.95 mark. Now, this is a very positive thing, but with a volume decline like this, right, I don't like it. So which means that tonight is very important. Now, if the video continue to go higher, break 410, then maybe we will see a new high tonight. But if the market resists itself and stay below 400, then I believe that this is the last hooray. Some more selling is going to come back down. I still looking at 350 to 360 level. Yeah, so traders, do watch out for these two numbers. Okay. All right. So from the video itself, right, we have Tesla. Now, Tesla has blossomed up since the time the low about 165. Right, you've been going up steadily to 207, and because of Tesla share going back to 200, Elon Musk became the richest man again. All right. But the question is this, we all know that 210 is a very critical resistance level, which I've been saying about this. And every time when the market fails to stay above 210, there will be a pullback. And I kind of believe that this time now it will likely be happening too. So 210 will be my considered level for shorting Tesla. And last one will be Amazon. Amazon shares have recovered 102 all the way staggered to 122. Now, in my opinion, this Amazon is near the high level for profit taking. I believe that if 123 can't break, then I'm going to see coming back down to 115 region again. Now, honestly, I'm not very optimistic with Amazon, Tesla, or NVIDIA, so that's the reason why I'm covering this today. Now, we all know that the US bank shares were down a couple of days ago because of the concern of the office real estate loans. And the thing is this, a lot of shares of large and mid-sized US bank basically came down, right? So that was what happened 2 days ago, but yesterday it has all rebounded. But you look carefully, this is not the end yet. In fact, itself, right, I believe the KRE is going to drop again to 36 again. And I believe that 1 or 2 banks will be close, as I said this before. So today I'm going to review the name to you. In my opinion, I think this bank is a rising concern. And this bank itself is PacWest Bancorp. Now, this counter 5 days ago was trading at $6.74. The low itself was about $6.30. Okay. Now, for the share for the last 5 days to be down by 4% is reasonable. But if you look at it from 6 months ago, this counter is down by 74%. Now, this is really scary. So, based on what we know, right, whenever such a thing is happening, it's just a matter of time the bank share get hit. So if going to be another rate hike in coming 13, 14 of June, I think this will send this counter back down below $5, okay? So some people are buying it in anticipation to see $10 because it's like find it's cheap. But in my opinion, I think that this counter will see $5 instead, okay? So let's see what happened next. So traders, watch out very, very closely. Now, the thing is this, for tonight, the initial jobless claim and ADP numbers this week has shown that there's market confidence. In fact, the consumer confidence up to 102.3. Now, this is much higher than a forecast of 99. And the GOLTS has climbed back up over 10 million jobs again. And the non-farm payroll, all right, the ADP number, sorry, is up from 170 forecast to 278 actual. Wow, this is amazing. Although it's lower than last time, but it's much higher than the forecast, and that explains itself, right, why the market was buoyant yesterday. And the initial jobless claim has actually increased from the previous sum from 230 to 232. So again, all these things tells me that the economy itself is still ready for is ready for a rate hike, okay? It's still not a point of getting concerned. Now today, non-farm payroll will be coming out at this 8:30 p.m. Singapore time. So watch out for this. I suspect the number will be high, likely about 250 zone itself, yeah, in my opinion. All right, so with all this thing in the market right now, you can see that the initial jobless claim is actually rising up. When the initial jobless claims is going up itself, right, that means that there is a chance of recession. So I believe that the moment we see 300,000 initial jobless claims that are done, 300,000, I suspect that will be the start of the recession. Okay, so watch out for this. We're not too far away, but still there's a distance. All right, so watch out for this, even though they've been climbing up rather steadily, and that's why I'm very concerned with the US economy. All right, now we all know the next FOMC meeting is about 12 days later, and you can see right now the market is now expecting it to be a great pause. As a matter of fact, right now it's at 5 to 5. It's now it's 5 to 5.25, and now 76% of the polling, they're actually looking at the rate hike, rate pause instead. Only 24% expecting a rate hike. But do note this number was 36% just 2 days ago. So once again, this is where the market's dynamic is shifting. So Mike Wilson retained his bearish view. He believed that the market is still going to continue. In fact, it's a bear market. It's going to continue. And he feels that, right, the earnings are not driving the tech stock. It's actually a lot of market manipulation. So let's watch what he has to say right now, a short one.
Mike, dovetail this with Ellen Zentner. Take the recession call of Morgan Stanley and dovetail into your caution on equities.
Yeah, so Ellen and team, I mean, they're not looking for a hard landing, but they are looking for, though, is a very sluggish economy. So it's 0% GDP growth.
Right.
Now, that's fine if you still got price. Our view is that 0% GDP growth will lead to bad price. And we're already seeing that in the goods sector. And then we've done some consumer work recently, which is we're starting to see signs that even the high end is starting to pull back on spending intentions on services. So,
all right, so basically it's very clear with what he said, that he believed that there will be problem coming in. and he believed that there will be the inevitable recession coming in. Yeah. So if you look at right now, the fear and greed index, we are trading at about 68, all right, the greed level. But something I'm bringing the concern is this one called the 5 days average put and call ratio. Now take a look, guys. This is very important. Okay. Now where we are right now is actually at about 0.7978 area. The last time the low end was back in February and it went to 0.79. So watch out for this, February the 7th. Okay. So that means that a lot of people are getting very complacent. They don't think the market is going to be down. They believe in buying the call options. But the thing is this, let's check on 7th February what happened. On 7th February, the market has recovered from the low end of 3,800 and it traveled all the way up to to this level of 4,200. All right, so up by 400 points. And the thing is this, if you look at it right now, we are even higher than back then in 7th of February. But that is where the put and call options went down to, ratio went down to 0.79. So the thing is, if you look at it right now, we are actually at the same point. And I believe that the next few days will be an important decider. If the next few days the market do pull down, the market go back to the moving average. So I believe that if the market do start to come down, right, we'll see 4,000 instead. So of course, now the market is kind of hot right now. Everything's doing good. But I just feel that, right, if we follow what happened previously, when everybody's on one side of the town itself, usually the opposite happened. So because it happened before, back then again over here. So after that, the market should back up again in terms of this ratio, and of course the stock market came down instead. Yeah, so all this information, please take note of it. Okay, the thing is this right now, other than that, we know that out of 500 S&P counters, all right, about 325 of them are actually trading lower. Okay, trading lower, while the remaining itself are still going up. So again, when the market breadth is at the low end itself, right, usually the stock market will pull down. Usually the stock market will pull down. So the thing is this, now it's actually moving up while we are here. So I suspect that it's just a matter of time, the S&P may be facing some selling pressure. And of course, look at the forward PE relative to the S&P and the PEG ratio, which is price to earning to growth ratio. We can see right now we are back to the same level back in 2001. And what happened then, if you cannot remember, I'll tell you very shortly, but let's see what the experts will say regarding about the tech stock rally, because they feel that right now there is a bit of divergence. The trade, this is their old indicator, shows that it's actually moving downwards, while the other two indexes, the NASDAQ and the rest, is moving upwards. So if that's the case itself, right, there's a big divergence. So it's a matter of time, the market will actually do something about it. And if that really happened, gosh, this could turn pretty nasty. Yeah. So look at the NASDAQ back in 2001 and 2002. You can see that was where the NASDAQ hit the peak and it pulls back down quite severely, and it happened again in 2001, 2002, another one round over here. That was 2000 to 2001, and then now it's 2001 to 2002. So with all these numbers telling you itself, right, it does tells me that to be very careful. And of course, you look at the SPY market breadth or the 50-day moving average, you can see that now, as of now itself, right, the market breadth is actually at the low end. But the thing is this, usually when it's at the low end, the stock market on top itself actually will pull back. All right, the market should pull back. It didn't. In fact, it go across all the different years. You can see that whenever this happened, the stock market will always pull. So now with this thing here, I suspect that, right, the market is just getting itself ready for the perfect cocktail, which I mentioned earlier. And if that's going to happen, right, stock market is going to fall pretty soon. So what can we do? Just buy some VIX. VIX has pulled back down all the way to 15 again, same level that I was talking about at 15. So I believe now is a good time to buy some VIX, hold it, and then see what happens from there as well. I doubt VIX will go down to 12, but anything's possible. But still look at it. If it's 12, I'll buy even more. Okay, guys, that will be all for today's. A lot of stuff to share with you. Hopefully you like the video. This is Cal signing off. Take care. Have a great day. Bye-bye.